Hello everyone, and thank you for joining us at this Your Overseas Home webinar. My name is Rosie. I'm a senior copywriter at Your Overseas Home and Property Guides. Today we'll be chatting with Malcolm McDowell from Chase Buchanan Wealth Management about your financial and tax considerations that you should think about when moving to France. It's great to see so many of you with us already, whether you're watching live on demand. Today, Malcolm has a presentation to share with you. We'll open the floor up to questions at the end. If you have any as we go along, do feel free to drop them in the questions tab at the bottom, and I'll get to them and ask Malcolm on your behalf. Before we start, for those of you who met Malcolm at our virtual event in November, you'll be happy to know we have secured a date for our show in March. It's on Saturday the 16th, and it will be held 8 till 4 p.m. That's UK time. If you are new to Your Overseas Home, it is a fantastic property show that you can attend from the comfort of your own home. It's designed to arm you with all the tools and connections you need to confidently buy a property overseas or in France, also overseas. We have more experts joining us in March than ever before, including Chase Buchanan and Malcolm. So get your e-ticket today and save the date. Rightio, I'll shut up and give the floor to you, Malcolm.
No problemo. Good afternoon, everybody. Okay, so the presentation has popped up now. Okay, so moving to France, financial and tax essentials. Okay, so before we get on to that, very short little piece on me, a little bit of background. I am a financial advisor who's been doing this mainly overseas for the last 21 years. So yeah, helping expats. I only came back to the UK around some COVID time. So most of my background is overseas, France being one of those countries. So I help people with becoming compliant, financially compliant in those particular countries and understanding the opportunities and pitfalls that come with moving offshore. So getting people's ducks in a row before they pull the trigger. So what we'll cover today is mainly the sort of main tax areas. This is the first one. So this is basically the UK equivalent to national insurance. I know national insurance is going up in the UK. This has stayed the same for the moment in France. Not much to read there. That is what it is. It's made up of 2 bits, as you can see, and there's no way getting around that. We all have to pay that. Okay. Next, okay, these are the income tax bandings in France. So these change every January. So these are brand new for 2024, and they go up with, well, supposedly go up with inflation on the 1st of January every year. They don't quite, but they kind of go up a bit. So, which is better than nothing. So you have a nil rate band, a bit like in the UK, a little bit lower, but it will eventually catch up the UK where things are going. So up to 11,294, 0%. Then, of course, 11,000 to 28,000, 11%. 28,000 to 82, at 30%. 82 to 177, 41%, and everything over 177 at 45%. What you're going to generally see now throughout the rest of the presentation is a bit of a theme when it comes to French tax, and that is that they tend to go after high net worths than they do the ordinary Joe. Yeah, so anyone sort of under the high net worth of under 5 million, no real issues. But if you start moving to France with a net worth of more than that, then there's a few more things that one needs to do to mitigate. There are still things that you need to do if you're less than 5 mil, but as you'll see in a moment. But generally speaking, it's a bit more of a, for want of a better word, sort of socialist tax regime, which tends to go after the higher net worths, especially those who don't declare all their funds when they turn up in France, which is something I would not recommend that you do. Okay, so moving on swiftly. Again, going back to the theme I just spoke about, higher net worths punished a little bit in France. So if you've got income of over 250,000, you've got that extra tax to pay, and according to those bandings, over another 4% to pay once you go over 500,000. Okay, so just bear that in mind when you move to France. If you're a high net worth and you've got quite a big income coming in, this is an additional tax that one needs to pay. Okay. Right. Okay. So this is important. A lot of nonsense written about this on the internet. So I want to make sure this is absolutely clear. This is the real estate wealth tax. Used to be called something else a few years ago. Just the wealth tax. It's now real estate wealth tax. So, and it's not as bad as everyone makes out. Okay. So this scares a few people because they read something on the internet and they don't get the up-to-date information. So let me just cover it. Okay. So you're only having to pay the real estate wealth tax once you go over 1.3 million in the value of your properties. Okay. So let me explain that. So this applies for your property assets worldwide. However, if you turn up in France and you purchase a, I don't know, £1 million property or €1 million property, that comes under obviously the 1.3 just, but you've got 5 years. If you've got properties back in the UK or anywhere else for that matter, you've got 5 full tax years before they count towards the 1.3. Okay. So, and another thing on top of that is if the net value of the taxable property exceeds 1.3 million, then the first 800,000 is exempt from tax. So once you get to the 1.3 million threshold, okay, then you're only paying the tax from 800 grand upwards, not for the full 1.3. Okay, so just bear that in mind. So you move to France, you buy a nice 300, 400,000 pound property, and you've got a few properties in the UK. Just bear that in mind. You've got 5 years to do something about it. Okay, and even if you buy a property, I know up to 1.2, 1.3. Again, you've still got 5 years to do something about the properties that you've got overseas. You can keep them ultimately. You don't have to sell them, but just bear that in mind. That's the tax that you'll be liable for after 5 years on your overseas property as well as your French property. Okay, hopefully I've explained that properly. Any questions, give me a shout. There are ways of mitigating that, but yeah, come to me if you've got any issues with that. Right, taxation of income of movable properties. This is an interesting one because it doesn't exist in the UK. So again, this scares people a little bit, but again, it's really nothing to worry about. This is a notoriously difficult tax for the French to collect, because as you can imagine, how they're going to really know what's sitting inside your house unless they go around and knock on your front door, and every front door in France, which of course they're not going to do. So what this is a tax on on anything that's not bricks. Okay, so anything that's not property. So anything that's bringing you an income that's inside your house or parked outside your house. So for example, if you've got a Lamborghini and you're lending it out to people, renting it out or whatever, then of course that comes under this. Okay, if you've got I don't know, some lovely furniture or some Ming vases or things like that, which are going up in value within your house, within your home that you keep. Again, the French are going to be interested in that. And they're looking at the 30% tax on that. So the capital gains or income tax. Yeah, it depends which one is less. You can get to choose. Okay, so, but we'll come back to that another time. Most people don't have to worry about this. Okay, and it's a very hard thing for the French to find out about anyway. So I won't spend too much time on it, and let's move on. Okay. So because most things in your house are depreciating assets, let's be honest. So nothing to worry about there. Okay, so UK pensions. I'll spend a little bit of time on this because it's a vast topic. So I've made a couple of bullet points here. Deferred UK pensions in the UK. Right. Okay. So I'll give you a little bit of background. Back in 2003, you had a thing called the European Tax Directive. Basically, what happened then is that the European Union were trying to make things a little bit fairer for pensions. So the whole directive was to do with the freedom of movement of people and the freedom of movement of capital. So obviously, European Union trying to compete with China, US, and so on and so forth. So freedom of movement of capital includes pensions. So, and all they were trying to do is make things a little bit fairer. So they realized that people were not working for 40 years for their, one company collecting their final salary. Most people weren't doing that anymore. They're doing 1 year here, 2 years here, 10 years here, and often in different countries. So what they realized is, okay, we need to sort of drag the pensions industry into the 21st century a little bit. And they said, look, if you're in France and you've got a pension back in the UK, or you're in Portugal and you've got a pension back in Spain, then you should be able to take that money with you. You're the beneficiary. It's your money. It doesn't belong to the pension company. You should be able to take it with you. All right. And that's all they were saying. And because they realized more people were moving around as well, so they said, this is what we should do. So that was the directive. As you know, a directive in the EU is not strictly speaking law, but it's pressure on the individual states to make that directive law, which is what happened in the UK on the 5th of April, 2006. So this legislation, everything I'm talking about, you'll see on the HMRC website, okay? And it's all to do with overseas pensions. Okay, so from that day onwards, anyone who had a UK pension, no matter what colour their passport, yeah, had the right to take that pension with them into the EU. Yeah, and there are lots of advantages, yeah, for them to do so. Okay, so and what HMRC, and of course this legislation came in 2006, and then what HMRC never really grasped when they put this in was that this would mushroom into a massive pensions transfer industry, yeah, which is exactly what happened. So in 2006, you had a bit of a trickle while everyone was trying to work out what the legislation meant. And then in 2007, you had some transfers. And then in 2008, it all went a little bit crazy. Okay, so you had a lot of pension transfers, a lot of money moving within the UK, not just out of the UK. So people getting their final salaries and their other SIPs and other things, amalgamating them. All this kind of stuff was going on. And then on top of that, you had money leaving the UK into overseas pensions. Okay, so I think in 2018, in the first 6 months, you had about 21 billion leave the UK in final salaries alone. Okay, so it's not, none of this is new news or fresh off the press or controversial. It's all in UK legislation, and you'll see it all on the HMRC website. There is a list of approved overseas schemes on the HMRC website as well. Okay, so just bear that in mind. If if you're thinking of moving overseas or buying a property overseas, this is definitely something that you need to do, because overseas pensions are. I won't go into the advantages and disadvantages at this point. That's something we can discuss, later on if you contact me. This is something that at the end of the day, overseas pensions are designed for people living overseas or who want to move overseas. And UK pensions are designed for people living in the UK. So this is one of the things that you do to be compliant once you move to France. Okay, if you have any frozen pensions, any pensions you're not currently paying into, or even ones that you are paying into before you move to France, talk to me, because then you need to do something before you go and start the balls rolling, because moving a pension nowadays is a marathon, not a sprint. Okay, it is something you can't do at the last minute. Once you're getting your train ticket over to France, it's something you need to organize in advance. Okay, so get in touch with me if that is your situation. If you've got any kind of occupational pensions or private pensions and you're about to move to France, you're thinking of moving to France in the next 12 months. Okay, next, inheritance tax. Okay, inheritance tax in France is notoriously complicated. Okay, but I've made it as simple as possible on this slide. So it is basically once you do 183 days in France, you basically come under this inheritance tax. It's one of the few countries where the double tax agreement between the UK and France actually covers inheritance tax. You'd be amazed. Most countries it doesn't. So you still come under UK inheritance tax from most countries in the EU. Okay, not France. You do 183 days in France, you come under these rules. Okay, simple as that, nice and simple. Tax-free allowance is only 100,000 for each child. Yeah, and then anything over that is taxed to those bandings that you can see on the presentation. Okay, there are ways of mitigating this. All right, come to me and I'll explain how that all works. Okay, but it's a vast topic and it's not something I can cover in sort of half an hour. Excuse me. But yeah, nothing to worry about. There are ways of mitigating a big chunk of it. Come to me and I'll explain how all that works. Okay, next. Okay, tax on traditional asset portfolios inside or outside of France. Okay, so obviously a lot of people who move to France from the UK, they rock up with ISAs and platforms and money in bank accounts and other investments and all that kind of stuff. Okay, the French will tax you on those, all right, and they'll tax you 30% flat tax or income tax. Okay, either one is pretty unpleasant. Okay, there's a very easy way of mitigating this. Very easy, and it was invented basically in 2017, when the French realized if they didn't put something in place, no one would be incentivized to come to France and bring their money. They keep the ball offshore. Okay, and then it'll be very difficult. And they sat down and they thought, well, it'll be very difficult for us to chase all those people because we don't really have enough manpower. So let's, encourage people to bring their money with them. Okay, and of course they were also cognitive of the fact that there are other countries who are, actively courting overseas people to move to their country, like Portugal with their golden visa program and all these others. So they felt they needed to do something. In 2017, they did. Okay, so there's something that basically you can do to mitigate all of that, or a large part of that tax. Okay, you completely mitigate the capital gains. So that's reason enough in itself to do it. So all you're doing is you can keep it in the same investments if you want. So let's say you've got an ISA, you're really, really happy with it. You don't want to change the investments. Well, you just do an in-specie transfer of whatever investments you've got into the French version. Okay, French version is basically an ISA on steroids, often referred to as the Assurance V, Assurance, and then VIE. Yeah, common as muck. Everyone who moves to France gets one of these. Every single bank has got one. There's even companies outside of France who do them. Okay, so the Pru have one in Ireland, would you believe? And there's also a very good company over in Luxembourg that does them as well. So yeah, look, it's a bit of a no-brainer. Who wants to pay the capital gains? If you've got an ISA, what the French do, if you keep it and move to France, is they'll look at when you started the ISA and then they'll backdate the 30% tax. All right, not good. Don't have an ISA when you're in France. Just get it out, put it under the French umbrella. It's a lot better than the ISA anyway. Okay, so just bear that in mind. If you've got capital redemption bonds, it gets complicated. It depends when you started them as to how much tax you're liable to pay. If you're in that situation, come to me. We'll find out your exact circumstances, and then we'll explain. Okay, this is what you're liable for. Does it make sense to move? And in most cases, it does, obviously. You're just becoming French compliant in your finances. Yeah, that's all you're doing. Yeah, in the same way that you're compliant in the UK now with your SIPs and your final salaries and your UK bank accounts, you just need to do the same thing when you come to France. Nice and simple. Okay. And that's pretty much it. Those are the sort of main areas that you need to think of. In terms of, look, at the end of the day, we all have to pay tax. That's an absolute given, but there's no need to leave a tip. Yeah, so all we need to do, all I'm advocating is getting your ducks in a row before you come to France and making sure you fully understand, or if you're already in France and you haven't done anything about this yet, then yes, of course, get in touch with me. I'll find out what your sort of situation is and all those main areas, so your cash, your investments, your pensions, your property, your companies, and then we'll see what we can do to mitigate that tax. Okay. I only get paid if I actually do some work for you, so please get in touch. And, I don't get paid for talking, unfortunately, like some UK advisors do. So please get in touch, and I will find out about you, find out about your situation, find out what you're trying to do, what your goals are, what your aspirations are, and then I can help you get there. Yeah. So that's it from me. And I think a good time to stop because I've been doing far too much talking. And Roseanne, over to you. What kind of questions do we have?
Yeah, I'll let you take a breather for a second. Yeah, that's a great quote. Don't leave a tip. I'll leave Malcolm's information there just in case anyone wants to write it down. Okay, so we've had quite a few questions come through. I'll start with Patty's asking, do I have to pay tax when I bring my car to France?
Okay, if it's less than 6 months old, then yes, they'll hammer you for an additional tax. So just make sure if you bring a car over, camper van, bike, anything on wheels, make sure it's less than 6 months old.
Okay, cool.
Yeah, that way you don't have to pay any import duties. Okay.
Cool. Okay, our next question is, at what point do you become a French tax resident?
Okay, 183 days. Just keep that in your mind. 183 days, you're liable for tax. That's the best way to think.
Okay, so this is just a question from me. Sorry to throw you off. So the 183 days you become a tax resident in France. Let's say for 90 of those days you were in Spain.
Yes.
Does the 183 days begin when you enter France?
Yes.
Yeah. Okay.
Correct. But I know where you're going with this. How easy is that?
I'm not trying to confuse you.
No. You feel free. Anyone can ping over questions. No problem. The way it works is that obviously countries which are part of Schengen, it's going to be very hard to prove where you were at any one point. So that kind of muddies the waters a little bit. Yeah, but if you're driving around in Schengen countries, it's impossible for the French to prove that you were out of the country. You will need to make a note of that and inform the authorities accordingly or not accordingly, depending on how you want to do things. Yeah.
Okay, fab. Okay, our next question is, can I set up a company in France and put my UK properties in it to mitigate the French real estate wealth tax?
Yeah, no, nice try, but no cigar. I get asked that all the time. No, you can't do that. The French will not view that kindly. They will not allow you to do that. Yeah, and it's a similar sort of thing with trusts. A lot of people try and put things in trusts before they move to France. Well, unfortunately, the French don't recognise trusts.
Okay.
So that's another thing one can't do. So there are ways to mitigate these taxes, but you just need to speak to me. I need to find out exactly how much property are we talking about and all this kind of stuff, and then we can find ways of mitigating that the legal way. Yeah, simple as that. So everything, when I say mitigating tax, I refer to I'm referring to mitigating it in a legal manner. Yeah. As soon as you start saying things like avoiding and even evading, then you're going down the wrong path. I can't help you with any of that. Yeah. So just to make it absolutely clear, I can help you with the legal ways of mitigating the tax. Just talk to me, get in touch with my contact details are there, and we'll talk about your individual situation.
Fab, thank you. On a similar note, we've got a question from Annabelle, who's asked, I have heard France doesn't recognise a trust. If assets are held in a non-French trust, how would that work?
Yeah, well, they would tax it in the same way that I showed on that slide. So it will either be 30% capital gains or income tax. Okay. Yeah, whichever one is the lower. Yeah, so they would, they wouldn't recognise what's sitting inside a trust. You've got to remember that trusts are a UK concoction. They came from, we were the ones that made them. They were invented as far back as the Crusades, when we used to go over to Middle Eastern countries, steal a lot of stuff, come back, and then keep it in the UK, and then go back and get some more. But we had to make sure the stuff that we nicked first time was looked after in the
protected.
UK.
I didn't know that.
Yeah, so hence the trust laws. So that's how they all came about, but not everyone likes them. Like the Americans don't like them very much, the French don't like them very much, and there's a few other European countries as well that don't like them. So yes, a trust won't be too helpful. So talk to me. I think probably if you're going to be a tax resident in France, then the best way to mitigate things is get it into the assurance fee and take it from there. Talk to me about the best way of doing that, and the best company to use. It just depends on what you're trying to do, and try to keep the costs down, obviously, which is important. Yeah, because some of the banks charge ridiculous amounts for an assurance fee because they know how good they are. So they think, well, this is how much we're going to save, so we'll charge you this. Yeah, it's a bit naughty, quite frankly. No, can I help you around that?
Okie doke. Our next question is from Helen. Is there an optimum time to move from the UK to France for tax purposes?
Great question, because you've got this situation where the tax years are different. So you've got your April to April, obviously, and then you've got your January to December in France. So so a good time to do it is once your tax year is over in the UK. So just after April, generally speaking. Look, it's not the end of the world. You can sit down with an accountant and work things out if you're moving just before April, that kind of thing. Or if the 183 days doesn't tick until, or the 183 days ticks before April. So just, I would say, just make sure you finish one and then move to the other. Yeah, try and make sure they don't overlap, because all they'll do is charge you the higher of the two.
Yeah,
there's no way. And also say to people who try and this is something I come across a little bit, and I discourage people from doing this most of the time. It depends, but most of the time, if they're a couple, one staying tax resident in the UK and the other one moving to becoming tax resident in France. Yeah, that can get complicated. That can get good. So be careful with that. I know some high net worth do cheeky stuff with that. Put everything into one name and all this kind of thing. Be careful with that. It's against the spirit of what they meant. So just talk to me about proper ways of mitigating that. Yeah.
Okay, fabulous. We are getting a lot more questions now. We're doing questions. I will say, if we don't get round to your question,
well, I'll get in touch with me afterwards if I can't get to the question now.
Yeah, we'll be forwarding these questions to Malcolm anyway. So don't worry, we're not ignoring you if we haven't got to your question just yet. Okay. Alison's asked, will our UK pensions still increase if we're living in France?
I'm guessing you referring to the indexing there. Yes. Was that the question? Will they increase? I think
so.
I imagine that's the indexing question. Yes, they do. They are indexed. They will continue to be indexed but that hasn't changed. One thing just to make you aware of, and I've noticed this firsthand with relatives, is the way UK HMRC, let's get straight to the point. The way HMRC have treated, and the way some of the pension companies have behaved since Brexit for people who are now overseas and started drawing down on state pensions, occupational pensions, very naughty. So HMRC started slapping emergency tax codes on anything that moves. Just because you're overseas, seems the whole Brexit thing seems to have emboldened them a little bit. And the schemes in the UK, pension schemes, I'll give you an example. My mother's German, so I'm half German, and she lives over in Germany. She's got 3 pensions. Each one of those since Brexit was stopped, and I had to go and get them reinstated, and all various spurious excuses for doing so. Yeah, so it's just poor behaviour. They don't really have any grounds to do it, but they've been looking for various little sneaky ways of stopping paying the money. Okay, so don't worry about that. I'm well up to speed on all of that, and I know exactly how to jump up and down on a pension scheme in the UK if they start behaving that way. If you have any issues like that, let me know. But yeah, so it's just be aware. But in terms of your indexing on whether that's a final salary or whether it's a state pension, no issue. Okay, at the moment. Yeah.
Okay, fab. Okay, I'll do a couple more questions. Natalie's asking, if I am a UK remote worker living permanently in France, do I pay SSC and French tax on my UK income via a French tax return? And would her UK salary be subject to national insurance?
No, you wouldn't be subject to both. You'd be subject to one or the other. So once you become tax resident in France, you simply tell the tax authorities in France, look, this is what's going to happen, or this is what has happened. I'm going to do the 183 days, or I've just done the 183 days. I don't want to be paying tax twice. What they will do, no matter what your income is, whether it's a pension or anything else, they will basically, you tell them, they give you a form to fill in, they stamp it, it goes to HMRC. Yeah, they say, you tell them, look, I'm not resident in UK anymore. They stamp it, and then you only pay the tax in France. Yeah. Okay. So if you do less than 183 days, then you're going to be paying the UK tax. Yeah. So I know people who've got properties in both locations and then prefer to be UK tax resident.
Yeah.
Why? But some people do like doing that for some reason. So because most of the time it doesn't work out very well. But yeah, because there's less ways in the UK of mitigating the tax, unless it's inheritance tax. Well, let's not go there.
Okay. Our next question is from Stephen. If you buy your land/property outright, will you still have to pay a tax on what you own?
In France, I'm not quite sure what it is. So okay, if you buy it outright, yes, of course. So I refer back to the real estate wealth tax that I mentioned earlier. If you buy it outright, or whether you've got a mortgage on it, it's the value of it. It doesn't matter. Yeah. So let's say you buy a 1.3 million with a 1 million mortgage. They're going to count it as 1.3 million. Okay. So just be aware of that. If you're buying something outright, same story. You'll come under and I'm assuming you're saying you mean buying it in France, obviously. So yeah, that'll immediately come under the real estate wealth tax. If you're under 1.3 million, nothing to worry about. Yeah, and then just bear in mind your foreign properties will be counted towards the 1.3 million after 5 years of being tax resident in France. Yeah. So yeah, I can just with regard to that question, I can just refer you to the real estate wealth tax slide. Yeah.
Sorry, I'm just reading through the questions at the same time. Some great questions. I will say where people have been a bit more specific, it'll just really help to get in touch with Malcolm. He'll be able to give you bespoke advice.
Yeah.
So
email.
Yeah, just click on the email. Okay, Mark's asked, I receive a pension in England but have a carte de séjour in France. Do I have to register for tax in France?
Yes.
Yeah. Lovely, easy answer.
Yeah.
Joanne's asked, if I have 50k in premium bonds, how do I move this to a French account?
Yeah, come to me. I help you with that. That's where I come in. It is basically very simple. You set up the French account first. Yeah, and then you contact your premium bond provider and post office or whatever, and then ping everything over to your assurance fee or whatever else you've decided to do. So that's very simple. That's where a financial advisor comes in. Yeah, and I would then help manage that money, help it grow, all these sorts of things. But make sure it's in the right place in the first place. So yeah, premium bonds, of course, they're going to be taxed on any kind of growth. So just be aware of that. Best to have it in an AV.
Yeah. Okay. I've got a couple of questions that are a bit more about how, what kind of you deal with, what you're able to advise with. So I'll ask you them so everyone can hear.
Yeah. Okay. Yeah. Go for it.
Annabelle's asking if you can tell me what this means as well. Do you have experience handling property held in an SCI?
No, but I can point you in the right direction with regard to that. Yeah, it's not that in terms of property. That wouldn't be my thing. I can point you, I can point you in the right direction. Yeah.
Peter's asked, do you work with US clients as well?
Yes, we do. We do work with US clients. Get in touch. It's very bespoke for US guys because obviously you guys get taxed on your passport. So, and things are a little bit more difficult for you because a lot of institutions won't go anywhere near Americans. Yeah, Bank of America. I don't mean that in a bad way. For example, Bank of America don't take Americans outside of America. Is one example, and there's lots of others because the problem is the FATCA rules. Mm-hmm. Okay, and that's all to do with the reporting of for Americans. So what used to happen back in the day is Americans themselves who were expats had to report back to the authorities, the SEC back in the US. Sorry, no one was doing that. So the Americans thought, well, how can we get them to pay? And they thought, I'll tell you what, we'll get the institutions to be liable. So if you're an institution, a financial institution, bank or financial institution of any type, and you've got Americans on your books, you need to report that to the American authorities. If you don't, it is the guys who run that company on the board. They're the ones who get fined and they're the ones who go to prison. So as you can imagine, a lot of people started dropping Americans who are not tax resident in America. So but there are certain institutions who will take them. And we have a guy at our company who's American, and he's been a financial advisor for a long time on these sorts of things. So for Americans, I tend to pass him on to the expert because that is a whole different
ballgame.
Yeah, it's a different ballgame. You need to be a specialist. So we've got a specialist on board. I will pass you on to him. Yeah. I kind of answer the other question, the previous question, a little bit more thoroughly. Is I will cover everything from cash, investments, pensions. Those are kind of the areas that I help with. Yeah, making people's money grow. I help people do two things. I help them save money. I help them make money, and I get paid when I do one of those two things or both. Yeah, that's kind of me. And when it comes to things like property or maybe visas, these sorts of things, that's not something I deal with directly, but I can point you in the right direction. Yeah. Okay. The team is a free resource at that point. Yeah.
Mm-hmm. Okay. Okay, I'll just do one final question.
We're running a little bit.
Yeah, we've run a little bit over. Jackie's asked, without putting you in the spot, can she ask about your consultation fees? Is it by the hour or is it dependent on the complexity of the case?
No, it depends on that. No, it's not by the hour, unfortunately. It depends entirely if I actually do some work. So consultations will continue for free, and then when actual work takes place, then that's when I get paid. So I get paid, like I said, in two instances. So let's say I help client save X amount of money, then I'll get paid a small percentage of that. If I help a client make money, then I get paid a small percentage of that. So that's basically how that works. Yeah, so I don't get paid for, unfortunately, writing reports and doing all the work beforehand and all these
the prep.
Yeah. So all the preparation, unfortunately, I don't. Most of the time, I don't get paid for that. If it's a huge amount of work, then I'll discuss it with the client, but that has to be quite a significant thing. Most of those clients, no.
Okay, Fab, thank you for answering that.
Right.
We'll wrap up there. Is about all we've got time for. Thank you, Malcolm, for all your insightful tips and advice. We strongly recommend to all our listeners to get in touch with Chase Buchanan and Malcolm directly to discuss your requirements in detail. There are his details on the screen. However, we will be sending you a copy of this recording tomorrow along with his details. Thanks again, Malcolm. Before we finish, I would like to invite everyone listening to leave us a review on Trustpilot if you have found this remotely helpful. Thanks again, Malcolm, and happy property hunting to everyone on the call.
Thank you.
Bye. Thanks. Bye.